Assalamualaikum. Welcome in new video. MCQs number 101. Profit volume ratio is the ratio of contribution to sale ratio, profit to sales ratio, sales to sale ratio, none of these. So correct option is option A, contribution to sales ratio. That is also known as profit volume ratio or PV ratio. MCQs number 102. Dash is the angle caused by intersection of total cost line and total sales line. Angle of contribution, angle of incidence, all of these, none of these. So it is the angle of incidence. Correct option is option B. Angle of incidence is the angle caused by intersection of total cost line and total sales line. MCQs number 103. At break-even point, contribution will be equal to variable cost, fixed cost, profit, option D, none of these. So the correct option is option B, fixed cost. Contribution means sales minus variable cost is equal to contribution margin, and when minusing from contribution to fixed cost, then equal it becomes a break-even point, the point where total revenue is equal to total cost when there is a zero profit and zero loss. So the correct option is option B, fixed cost. MCQs number 104. The ratio of contribution to is called PV ratio. The contribution of ratio to sale is called profit volume ratio. So option B is correct option. MCQs number 105. Marginal cost is the aggregate of prime costs and fixed overhead, variable overhead, contribution, or none of these. So correct option is option B, variable overhead. So marginal cost is the aggregate of prime cost plus variable cost, variable overheads. MCQs number 106. When fixed cost is deducted from contribution, the balance will be variable cost, profit, total cost, or sales. So correct option is option B, profit. When deducting fixed cost from contribution, the balance figure is known as profit. MCQ number 107. When sales are 30,000 and profit volume ratio is 20%, then contribution will be, the correct option is option C, 6,000. Option MCQ number 108. When fixed costs are 4,000, profit volume ratio is 20%, then break even point will be option C, 16,000 is the correct option. MCQ number 109. When profit is 5,000 and profit volume ratio is 20%, margin of safety will be 25,000. Option B is correct. MCQ number 110. Fixed costs rupees 6,000, profit required rupees 4,000, profit volume ratio is 50%, then sales required will be equal to option A 6,000, option B 4,000, option C 10,000, option D 20,000. So correct option is option D 20,000. MCQs number 111. Variable cost ratio is 60%, sales equal to 20,000 and fixed cost 5,000. Then the profit will be option A 15,000, option B 12,000, option C 3,000, option D 10,000. So correct option is option C 3,000. MCQs number 112. Responsibility accounting is also called dash accounting, profitability accounting, management accounting, all of these, none of these. So correct option is option A. Responsibility accounting is also known as profitability accounting. Option A is correct option. MCQs number 113. In responsibility accounting, the organization is divided into different centers. Option A responsibility center, option B cost center, option C profit center, after D none of these. So correct option is option A responsibility center. MCQs number 114. A cost center is a segment of the organization where the manager is responsible for cost, inputs, A or B, none of these. So correct option is option C, A and B. A cost center is segment of organization where the manager is responsible for costs and inputs. So option C is correct option. MCQs number 115. Both costs and revenue was measured in centers. Cost center, profit center, revenue center, all of these. So both costs and revenue are measured in profit center. Option B is correct. MCQs number 116. Dash is the driver, that factor which causes cost. The cost driver, profit driver, all of these, none of these. So correct option is option A. Cost driver is a driver that factors which causes cost. Option A cost driver. MCQs number 117. Cost driver for activities is called activity driver, expense driver, driver, none of these. So correct option is option A activity driver. MCQs number 118. A center where the manager is responsible for sale is cost center, revenue center, investment center, none of these. So correct option is option B revenue center. A center where manager is responsible for sale is known as revenue center. MCQs 119. The performance of investment center is based on cost of the center, profit of the center, profit and investment of the center, revenue of the center. So correct option is option C, profit and investment of the center. MCQs number 120. Responsible accounting is used for control cost, planning, decision making, pricing. So option A is correct, cost control. Responsible accounting is used for cost control. MCQ 121. ABC system is used for material control, wages control, overhead allocation, pricing decision. So correct option is option C, overhead allocation. ABC system is used for overhead allocation. MCQs number 122. A cost center is Production department where all products costs are aggregated. An area of business accountable for both costs and revenue. The part of the business where all costs are paid to supplier. An area for which costs are accumulated. So a cost center is a center, an area for which costs are accumulated. Option D is correct option. MCQ number 123. An investment center is a responsibility center where the manager has to control of costs, profits and product quality, costs, profits and assets and costs. So an investment center is the responsible center where the manager has control of costs, profits and assets. Costs, profits and assets. Option C is correct. MCQs number 124. Responsibility accounting aims to ensure that costs become the responsibility of a specific manager. Option B, reduce the cost that a department incurs. Option C, allocate costs to all areas of a business. Option D, ensure that a manager is punished if things go wrong. So the correct option is option A. Responsibility accounting aims to ensure that costs become the responsibility of a specific manager. Option A is correct. MCQs 125. Prime cost may be defined as the total cost of manufacturing a product, the total direct cost of manufacturing a product, the cost of first stage of manufacturing, the total cost of production. So option B is correct option. Total direct cost of manufacturing a product means prime cost is equal to direct labor cost plus direct material cost. So option B is correct. MCQs number 126. Which of the following best describes a fixed cost? Remains constant irrespective of the level of activity. Represents a fixed portion of total cost. Increase proportionally with output. Has a direct relation with output. So the correct option is option A. Remains constant irrespective of the level of activity. Fixed cost is a cost which organization has to bear whether the production is at maximum level or it is a zero level. So MCQs number 127. The weighted average method of stock valuation would be most appropriate for chemical manufacturer, a food retailer, a builder contractor, a motor component seller. So correct option is option A, chemical manufacturer. Weighted average method of stock valuation would be most appropriate for chemical manufacturer. Option A. MCQs number 128. Direct labor cost will include all labor cost attributed to product, direct labor cost plus any bonuses, total direct labor hours at the normal hourly rate of pay, direct labor cost plus any bonus or overtime premium. So direct labor cost will include total direct labor hours at the normal hourly rate of pay. Option C is the correct option. MCQs number 129. The management accounting is said to meet the internal accounting needs of an organization, the needs of law that govern company financial reporting, the regulatory requirements of the organization, the external accounting needs of the organization. So correct option is option A. Management accounting is said to meet the internal accounting needs of the organization. MCQ number 130. Which one of the following is not a recognized cost classification? Time, function, performance, type. The correct option is option C, performance. Is not recognized as a cost classification. (131) Direct costs are also known as indirect cost, overhead cost, prime cost, marginal cost. So the correct option is option C, prime cost. Prime cost equal to direct labor cost plus direct material cost, so these are also known as direct costs or prime costs. MCQs number 132. Indirect costs are also known as direct cost, overhead cost, prime cost, marginal cost. So correct option is option B, overhead cost. Overhead cost are indirect cost plus overhead cost. Excuse number 133. Which of the following is not true? Marginal accounting information is prepared for internal users. Marginal accounting information is not required by various laws. There are specific standards of acceptability for managerial accounting. Option D, the structure of marginal accounting practice is relatively flexible. So option C, there are specific standards of acceptability of managerial accounting is correct option, because this is one which is not true. All other statements are true in nature. MCQ number 134. Which one of the following are basic inventories for a manufacturer? Indirect materials, goods in process and raw materials. Finished goods, raw materials and direct materials. Raw materials, goods in process and finished goods. Option D, raw material, direct factory and direct labor. So for a manufacturer, inventories are raw material, goods in process and finished goods. Option C is correct. MCQ number 135. The three basic elements of cost of a manufactured products are indirect material, indirect labor and manufacturing overhead. Option B, merchandise inventory, work in process, finished goods inventory. Option C, direct material, work in process, finished goods inventory. Option D, direct material, direct labor and manufacturing overhead. So correct option is option D, direct material, direct labor and FOH are the three basic elements of cost of manufactured product. MCQ number 36. A cost which changes in proportion to changes in volume of activity is called fixed cost, controllable cost, variable cost, opportunity cost. So correct option is option C, variable is a cost which changes in proportion of changes in volume of activity. With the increase in volume of activity, the total variable cost will increase. With decline in volume of activity, the total variable cost will decline. So option C is correct. MCQ number 137. A direct cost is a cost that is classified by behavior, traceability, controllability, relevance. So the correct option is option B, traceability. The cost which can be traced easily is known as direct cost, and the cost which cannot be traced easily is known as indirect cost. So option B is correct. MCQ number 138. A product cost is a cost that is classified by behavior, function, controllability and relevance. So correct option is option B, function. Function is a product cost is a cost that is classified by function. MCQ number 139. Which of the following is a period cost? Direct material, indirect material, factory utilities, administrative expense. Option D is correct. Administrative expenses are the period cost. MCQ number 140. Managerial accounting information is generally prepared for shareholders, creditors, managers, regulatory agencies. So correct option is option C. Option C, manager. Managerial accounting information is generally prepared for managers so that they can effective decisions. MCQ number 141. Which of the following is not an internal user of management information? Creditors, departmental manager, controller, and treasurer. So option A is correct option. Creditors are not the internal users of management information. So departmental manager, controller, and treasurer are the staff of organization. MCQs number 142. Sales commission are classified as prime cost, period cost, product cost, indirect cost. So correct option is option B, period cost. For explanation of any MCQs, please mention MCQs number in the comment section and ask the relevant queries. Please subscribe the channel for further videos. Assalamu alaikum, Pakistan, Paindaba.